Hello, we are going to learn more about the subtopic on long-term borrowings, the learning objectives, to record new loans and loan repayments as journal entries and in ledger accounts, and to prepare extract of the balance sheet showing the presentation of loans. Long-term borrowings is when a business takes up a loan from the bank. To record long-term borrowings, the journal entry is debit cash at bank as asset increases because the business receives the money. Credit long-term borrowings as liability increases because the business owes the bank money, which increases the liability of the business. When the business repays the loan, the journal entry is debit long-term borrowings as liability decreases, credit cash at bank as asset decreases. Long-term borrowings can be classified into current liability and non-current liability in the balance sheet depending on the repayment period. The portion repayable within 1 year is classified under current liability in the balance sheet as current portion of long-term borrowings. The portion repayable after 1 year is classified under non-current liability in the balance sheet as long-term borrowings. Let's take a look at the following example. On 1st September 2012, the toy shop took up a loan of 200,000 from the bank. The loan is repayable over 4 years. The repayment is 50,000 on every 31st of August. The financial year end is on 31st December. Let's use a timeline to better understand the loan repayment. The financial year starts on 1st January 2012 and ends on 31st December every year as shown in the timeline. It is on 1st September 2012 that the business took up a loan of 200,000. The first repayment of 50,000 is on 31st August 2013. The second repayment of 50,000 is on 31st August 2014. The third repayment of 50,000 is on 31st August 2015. And the last repayment of 50,000 is on 31st August 2016. Let's focus on the financial year 2012. Since the loan of 200,000 is taken on 1st September 2012, the business will debit cash at bank as it receives the money from the bank, so asset increases, and credit long-term borrowings as its liabilities increases. In the balance sheet extract as at 31st December 2012, the 200,000 loan is split into two portions according to the repayment period. Since the first repayment of 50,000 is on 31st August 2013, which is within the next financial year 2013, this amount of 50,000 is classified under current liabilities as current portion of long-term borrowings. The remaining 150,000 is repayable after 1 year, as can be seen from the second, third, and fourth repayment dates. So, this 150,000 is classified under non-current liabilities as long-term borrowings. Next, let's focus on the financial year 2013. Since the first loan repayment of 50,000 is on 31st August 2013, the business will debit long-term borrowings as its liability decreases after the loan repayment and credit cash at bank as the bank as the business uses money from the bank to repay the loan, thus decreases its assets. In the balance sheet extract as at 31st December 2013, the remaining loan amount of 150,000 is then split into two portions according to the repayment period. Since the second repayment of 50,000 is on 31st August 2014, which is within the financial year 2014, this amount of 50,000 is classified under current liabilities as current portion of long-term borrowings. The remaining 100,000 is repayable after 1 year, as can be seen from the third and fourth repayment dates. So this 100,000 is classified under non-current liabilities as long-term borrowings. This ends the section on long-term borrowings. Click on assignment 3 on long-term borrowings on the bottom of the page to attempt a question. Have fun trying the question.